Alright guys, I know it's been like almost 2 weeks since my last video. I apologize for not coming back sooner, but let's just get a little update of what's been going on. So the market has still been rallying, but had a pullback. So if you may have noticed that some bullish articles started coming out in the news around this time, right? So then what do we get? A pullback. But then today, like let's go to, I don't know, I think I saw it on Market Watch, was it? So if we go to, I don't know what the hell that ad was. Okay, so if we go to, yes, this is the article. So we got some bullish articles, right? So that made me a little hesitant, like, oh, there's going to be a pullback. So we got a pullback, and we'll see. But you'll notice that here's how to get a little bit more nuanced with the whole news manipulation, right? So they said that we're officially in a bull market, right? But how long did that narrative last? Pretty short, because right now you see U.S. stocks head for punishing sell-off as unknown unknowns could drag market lower. Analysts warn. Like, what are they even saying? Like, is this a joke? Unknown unknowns. Okay, so what am I doing? So if you saw one of my previous videos, I can't remember which one it was, but the when you have a bullish bias, the best way to DCA or dollar cost average into a long position is to buy below the low of a red day, but not if it's a high. So this is a red day, but it formed a high in the market. So you're not buying below this day's low. But what you would do is you buy below. So Tuesday happens, you just sit there. Friday you sit there. I actually exited some long positions on Thursday or Friday. Um, but so you wait for Friday. You see Friday's down close. So what are you doing? Nothing. You're sitting there waiting. You're waiting for all of Tuesday to happen. Okay, Tuesday's also a red day. Okay, so now you have your target. Anywhere below the low of this day, you are buying stocks that are like Apple, Microsoft, Amazon, Tesla. Okay, you're buying one of those stocks. So you're buying below that day's low. Then what are you doing? So then this day's finished. So what are you doing on Thursday? You're buying below this low of day. Okay, so you would have an entry here and an entry here. Generally speaking, I mean it would be a specific stock, but so you're buying below that day's low, buying below this day's low. Okay, so now already this position would be green, and this position would actually also be somewhat green, right? Now, okay, it could sell off further, so then where would your next target be? You'd be looking to buy below the low of this day. Okay, and if it seems to keep pushing lower, then what do? You hold on to those long-term positions. It's okay if they're in drawdown. What do? You switch to the weekly chart. Now, what you're going to look to do is buy below the low of a red weekly candle. So you would be looking to DCA below this week's low. If it closes red, by the way, Friday has to close and this candle has to close red. Okay, so you're waiting for a red candle that's not a high to happen on the weekly, and you're buying below the low of a weekly candle. Okay, so that's just a good way to DCA. Okay, it's not that difficult, because if you look here, you would have got actually, if you zoom way in, this strategy would work. You don't buy below that because it's a high. Here's a red day, you buy right there below it, and look, the perfect, most optimal entry for that time period was that little bit that it went right below that red day's low. See, am I right or am I right? Okay, same thing here. This, it's kind of a high, but not really, because there's a swing high right here, right? So you would add more below this red day's low, right? And how would those positions be doing now? Very, very good. Okay, here, red day, has formed a swing high, so you don't have to buy below that day's low. It's up to you, but maybe you could set this green candle here as a target and then buy below there. Or maybe you would have missed getting in here. That's fine. Completely fine. Here, red day is low. It's not the swing high, so you're buying below the low there. Do you see how simple that strategy is and how effective it is? You have to know that you have to have the right bias, but if you have the right bias, then that's the best way to get an entry. So that's what I did this week, as I bought below this red day's low, and I may have not gotten this. I don't know. I think because my sleep schedule's messed up, so I was not awake during market open today. So, and I'm buying options, long-term options, so I couldn't get a fill on options while they were open. But anyway, I wish I had. But so anyway, I'm in. Maybe I am. I don't know. But anyway, I'm already up on some positions because of this green day. So hopefully it will keep going back upward, which seems pretty likely. And yeah. So again, when you see a narrative switch, pay attention to how long it lasts. Because if it's short-lived, like don't just change your bias. Like I started seeing bullish articles, but I was like, okay, if the sentiment stays bullish for a while, I will become suspicious of my bullish sentiment. But this is already confirming to me that they were just saying, okay, we're technically in a bull market because it's up 20%, right? The S&P is up 20%, so it's literally in a bull market. So they just put that fact out. But now here comes back the narrative that they want to sell to you, not the actual facts. So I'm still a bull market, but we'll see. You know, there could be a big sell-off coming, and so again, if a sell, I'm not saying there will be. Okay, I doubt there will be, but there could be. Like by a sell-off, I mean more of a bigger pullback, where maybe they target these lows and then that fair value gap, and then go from there. Or they might target this order block right here. But again, if it sells off more, you just go to a bigger time frame and buy below a weekly bars low, right? Because look at this. This is the bank panic, right? So if you were DCAing, you would be, there's a red day, so now you're buying below that red day's low. Okay, here you're buying below this red day's low. That swing low, you're buying below that swing low. It's not a red day, but it's a lower low than a red day, right? So if you'd gotten positions here, here, and here, think how much money you would have made by now, right? Here, another example. Well, that's a high, so no. So red candle, another red candle. Now what are you looking for? Buy below this red week's low. Boom, right there. The completely beautiful entry, right? This is how banks are probably doing it. To be realistic, I've never worked at a bank or traded for a bank, but once you see what I'm saying, like this is a pretty logical way to accumulate a position when you know the market bias, right? So anyway, yeah, I don't really have too much else to say right now. I would say keep looking for higher prices. We are rejecting from this liquidity here. But as you can see, like previous liquidity that we come up from and reject, we end up just bouncing and keeping going higher. Or the market does, not we. I gotta stop saying we. So the fact that we've taken this out could mean that a sell-off is warranted. But even then, it's not gonna last that long. And I wouldn't be surprised at all if it just that's all that we got was 3 days of selling. So that's why I already DCA'd in. And if it goes lower, I'll DCA in more. Okay, so yeah, thanks for watching, guys. I don't have all this like conspiracy stuff to talk about today. I kind of have a headache, so I just wanted to give you a little more technical advice and say, yeah, I'm still looking for bullish prices. The narrative has switched back to trying to a sell narrative, so the bull articles did not last long. So to me, that says that prices are going higher. Also, well, if you want another thing, I know I brought this guy up before, but if you inverse this guy, you'll probably just make money. Like, I'm not kidding. He does talk about growth stocks and stuff, but okay, here's another thing is like these people, they're trying to get you into small and mid caps, which are probably like pump and dumps. Someone, yeah. Let's see. But there was one, like, it's when you see these ones. Selling Tesla stock. Here's the truth about it, right? Monstrous moves for Tesla, and there's the red thing. So, again, when you see sell narratives coming out from these people, like who's giving this guy the script, right? So I'm just trying to be realistic about it, guys. So yeah, I'd be seeking higher prices and trying to make money on long positions now because people are still looking for sell-offs. People are still like, this is just a psychological thing that here, wait, I'll get off this for a sec. So a psychological thing that about just how like noob traders think is that they will be looking for, they'll be trying to catch tops in a bull market and they'll be trying to catch bottoms in a bear market. You know what I mean? And that can happen intraday as well. But like people, they'll be waiting for the capitulation to happen so they can catch a big short position and make a bunch of money. And so what's going to happen? They're going to keep getting their face ripped off. They're going to get chipped away at. Like every time their stop loss is going to get taken, and the market's just going to take piece by piece of their account until they have nothing left, right? So everyone keeps trying to catch the top, right? And so as long as you are able to gauge that sentiment that retail traders are continually trying to catch the top, what's the market going to do? It's going to continue to punish them, right? So that means it has to keep going higher to force them to sell for a loss. And a smart trader or a bank trader will make the difference, right? That's just how it is. Okay, so thanks for watching, guys. I'll catch you guys soon.